What's the other report that I analysed? Well, the S&P Global knockout, the KPMG REC report on jobs. More real time than waiting for the ONS figures. What was the positive headline? Permanent placements falling at the slowest rate in a year and a half in January. What's the key word? 4. The PMI is slightly more up to date, so it sounds like February's report on jobs might be more bearish. Temporary billings expanded, more candidates were available, and there were stronger rises in both starting salaries and temporary wages. Not altogether negative, but the overall trend remains at fewer jobs, of course. What's the best insight from the report? Well, in my opinion, it was from the REC chief executive when he says, the decisions firms are now making involve lots of trade-offs, such as whether to create jobs in the UK or elsewhere, or which jobs need the human touch as opposed to an automated solution. I think he's absolutely nailed it there, to be honest with you. On we go with the gilts and swaps then. The 5-year gilt had a quiet but trending downwards week as far as the yields were concerned. Opened at 3.815, closed at 3.785, so 3 bips down, very quiet, low volatility. The 30s opened the week at 5.211 and declayed slightly more to close at 5.157, about 5.5 basis points down for the week on the yields there. So the yield curve got a little bit shallower, and when we look at the difference over the past year, the shape is very similar from about 12 years and beyond, but the shorter end and the medium term end have broadly come down about 0.75% at the short end and about 0.25% at the medium point. So slower, steadier, less volatility, more like bonds are supposed to behave. How about the swaps? Well, 3.55% on the 5-year, 3.357% on the 2-year, markedly lower than 12 months ago. 45 bips lower on the 5-year, 70 bips lower on the 2-year. So that 3.55 close on Thursday corresponded to 3.794 on the gilt. So this discount that was 34, 35, 36 basis points from the gilt rate to the swap rate is now still holding at more like 25 basis points or so. And we are going to see that discount ebb away and away and away as the interest rate still goes down.